What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, we're going to be picking up where we left off yesterday with regards to our algo strat that we're building out for XFP Mini SPY. Now, we all know SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. And yesterday, we're building out a strategy in order to algorithmically trade it, right? And what is it? Algo trading. So algo trading is being able to create a set of rules and instructions that allows a program, right, or a bot, for lack of better words, in order to buy, sell an asset. And the asset that we're using here is XSP. Now, here at Creative Coder, our aim is to be able to create different algo trading strategies, AI agents, machine learning, right? And I've been doing this since about April of this year. So I wanted to be able to show you all my journey and how I not necessarily just go through being able to create the bot, right? Because I think that's the easy part, but step by step, how we create the strategy, right? How we use different sources in order to make said strategy. So what we're doing is picking up where we left off yesterday. So what I want to do is just go through step by step how we got to the point where we are right now. We do have our back test. It is here. It is ready to go. And we're going to run it. But before I run it, I want to go through step by step what we've been doing. So before I continue on, don't forget to like and subscribe to the video. This is not financial advice. If you do seek financial advice, please make sure you talk to a certified financial planner, those that are licensed, or anyone to be able to assist you with your financial questions. This is merely educational. Beautiful. All right, let's get this thing rolling. All right, so step one, again, we're using XFP, right? So that's mini SPY. So remember we talked about this yesterday? Let me go ahead. I just want to just go through just quickly, right? Quickly on what XFP is, right? So think of SPY, the S&P 500, as a giant team of the 500 biggest companies in America. Now think of an index option as a ticket that lets you bet on whether the whole team will go up or down. So what we're designing is a strategy that is going to, when we think the market is going to go up, we're going to go buy call options because we're bullish on it, right? And to be able to really break this down, so I'm looking at XFP right now. This is on TradingView, and I'm looking at a 1 minute chart. So what this means is that each one of these candlesticks represents 1 minute of data between the buyers and the sellers. When you see a green candlestick, that means the buyers or the bulls have won. So we think the market is going to go up, right? Indicated here. And when you see a red candlestick, that means the sellers or the bulls are in control and they're trying to push prices down. Right now, I also wanted to be able to talk about these wicks, right? So you see that long wick, that's a pause, um, that's sticking out of the candle, right? So what that lets me know is that even though the sellers or the bears tried to push the price down, there was rejection, right? So they tried definitely so hard to be able to push the price down, but the bulls came in and then pushed the price back up, even though it closed red, right? So even though it closed lower than the previous candle, right? But this wick lets me know that, oh, I have it right here. My phone, it's always there. That they try to push down the price to newer support levels. So what is support and resistance? Now, supports lets us know that the underlying asset is making lower lows, right? So this is typically when we buy. So when the bears are in control, their main job, their main tactic, right, is to be able to push the asset down to be able to crash through support levels, right? And bulls, what they want to be able to, what they want to happen is they want to crash through resistance levels, right? So they want higher highs, right? So typically we buy at support and then we sell when it crosses resistance, right? Buy low, sell high. So this is just a little bit more nuanced. So whenever you hear somebody saying, "Oh, I have a SPY option and it's crashing through support levels," that lets me know, okay, automatically, oh, new lower lows. What's going on, right? Why are the bears trying to push the price down? And then in the inverse, somebody lets you know, hey, I have a SPY index option and it's crashing through resistance levels. That lets me know, okay, bet. higher highs. What's going on, right? Why are the bulls trying to push the market up? Now, either way it goes, the strategy could work either way, right? Because when it's crashing through support, we're going to be buying puts because we think the market is going to go down, or when it's crashing through resistance, we're going to ride that wave up, continue. We're going to buy calls because we think the market is going to go up. So those are the two main option contracts that we're going to use. And when you think of an option contract, that is, so one option contract equals 100 shares of an underlying asset, right? So when we buy one option contract, we're buying 100 shares at a fraction of the price, but it allows us to be able to ride the wave whichever way we pick, right? So we can pick that is going to go up, we can pick that is going to go down. All right, let's keep going. If you do have any questions, please let me know. The volume, hold on. One option. All right, beautiful. Let me know. I will keep an eye out on what's going on, but nonetheless, let's keep going. So what I was saying is what we're doing is our strategy is saying, okay, we're going to look at let me go back to the strategy now that we know what, mini spy. Let me just finish that so we can understand that. So mini spy, XSP, we're just going to call it mini spy because I was getting tongue tied yesterday saying XSP. So just, all right, mini spy. But y'all understand that it's the S&P 500. So it's the 500 biggest companies within the New York Stock Exchange. So let's just go look at the holdings, right, of SPY. SPY is an ETF. What is an ETF? An ETF is an exchange traded fund. So all that lets me know is that there's multiple companies within this underlying asset. This particular ETF has 500 different companies, right? So if we wanted to, for an example, go get stock in Nvidia, Apple, Microsoft, Amazon, Broadcom. This is Google. This is YouTube. How ironic, right? This is Facebook, Tesla, Berkshire Hathaway. If we wanted to do this individually, I would have to buy each one of these stocks, right? Or we could just buy an ETF, and this particular ETF has 500 different stocks within them. These are just the top 10 holdings, right? But there's 500. So one of the most, there's a little bit more. We do have IWM, and IWM is the Russell 2000. So that's the small 2000 small cap companies. So these are companies that anywhere between, what is it? 30 under, I think it's under 30 million. I'm pretty sure small cap is under 30 million. Can you confirm the difference between small, mid, and large cap? Just real quick, I'm pretty sure, just want to make sure. Small cap companies size. Okay, 250 to 2 billion. Let's see here. Large cap, 10 billion plus, 2 billion to 10. All right. So 300 million to 2 billion. So small cap companies, right? So these are up and coming companies. 300 million is up and coming. It's crazy, but nonetheless, that's what it is. So we have the IWM, which is the Russell 2000. That's the 2000 small cap companies, right? So there is a little bit, and that's an ETF as well, right? So there's a lot more diversity we can get into and a lot more granular, right? But the reason we like using SPY because of liquidity. What is liquidity? It means that we can easily buy and sell without having the risk of being able to have the option contract expire worthless, right? So what's the point of being able to go through all of this, right? Create a strategy, being able to backtest the strategy, being able to walk forward the strategy, right? What is a backtest? A backtest is being able to take your strategy, drop it off in a time machine, and we want to see how well it does for a particular year, right? If it does well in the past, there's no guarantee, but the idea is if it does well in the past, then there's a high likelihood that it'll do well in the present, right? So we want to be able to create a strategy, and that's what we've done, right? Which is displayed over here. I'm just taking a while to be able to lay the context, right? Because this is part 2. Part 1, which is in the comments and in the description. So if you want to go check that part out, it does lay out how we got to this point. So I'm going to walk this through. So when we continue our steps, what we're going to be doing is creating a market regime filter. And I don't know if I'm going to be using TradingView in order to do that. I'll see how I feel about that. And then also we're going to be finished optimizing the strategy, right? All right. So let me finish talking about mini spy, and then once I'm done talking about mini spy, then we can really get into this strategy. So honestly, this is what you want to be able to understand. It's smaller, easier to manage. SPX is expensive, but Mini SPY is 1/10 the size. It has the same expiration dates, right? We're doing 0 DTE. So these are option contracts that expire the same day, and cash settlement. So what that means is that we never receive a deal with receiving 100 shares, right? We're just getting the money, the profit, or losing the money, the loss, right? So a super easy example, the S&P 500 is around 5,000. SPX might cost too much in your account, but Mini SPY would be priced around 500, 1/10 the size. So when buying options, Mini SPY is much cheaper than SPX, but you're still trading the same movement of the S&P 500. All right, beautiful. So we understand it. So now let's get to the steps that we've taken in order to get to this algo strategy, right? So step one was we went to TradingView. So I should have did that. Let me go back to TradingView real quick. So we went to TradingView and then clicked on indicators. And then what we did was I just typed best, right? And then what came up, let's see if I can find it again. It was the best super trend strategy. So give me 1 second. So you saw what I did. Hold on, let me just make sure. I'm on TradingView. The asset that I'm looking at is SPX, right? This is SPY. So what I did is XPS, I'm looking at the 1 minute. And what that means is that each one of these candlesticks represents 1 minute of data. I clicked on indicators and I just hit best. And I was like, all right, let's just be a little bit on the nose, right? And then I'm okay. The best super trend. Let me see if I can find the right one. Best super trend strategy, right? And then I clicked on source code. You see right there, these brackets, source code. And then it opens up the Pine script, right? So what we did, all right, went to TradingView, and then we found our foundation for the strategy, right? And it's a moving average crossover with the fast moving average crosses, the slow moving average. This is our momentum trigger, and the periods that we're using is 2 and 12, and more on that later. So what this means is that when the fast moving average, which is 2, so it's looking at 2 minutes, right? Like I'm going back and forth, but this is good. Let me come here because this I can explain it here a lot better. NASDAQ. Oh, I'll maybe use that one next. I want to do XSP. Okay. Mini SPY. So what our strategy is saying, it's looking at the last 12 minutes, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? In total. So what it's saying is that our fast average, which is the first 2, if the fast average crosses above the slow average, and the slow average is the 12, right? So it's the entire period, and the period is just minutes, right? So if the first 2 crosses above the entire 12, then we have a bullish signal. What that means is that we think the market is going to go up, but the inverse, and we're going to buy call options, right? But the inverse, if the first 2 crosses below, right, below the entire 12, then we're bearish on the market. We think the market is going to go down, right? So that's what our moving average crossover does. All right, let's make sure I'm back. Hold on. Beautiful. So our moving average crossover is the 2 and the 12. So when I say, okay, I'm thinking about changing the fast over the slow, I don't think I am, but when I do think about it, I just gave you a visual representation of how that works, right? So the super trend confirms we're heading in the right direction using the average true range, right? So what it does, I feel like, okay, I'll just stick over here for a second. So what it does for the super trend is looking at the past 5, is it 5 or 3? Let me just make sure. 3. Okay. So what the super trend, I can zoom in a little bit more for this one. So what the super trend is doing, it's looking at the past 3 minutes. So 1, 2, 3, right? And we want to be able to make sure that the factor, it stays within a factor of 2.2, right? Meaning that, so we're going to get a little bit more into that so you can understand the granular aspect of it when I go through the list. So let me just go back to the list so we can really understand it. All right, beautiful. So that is the step one, and then step two were the parameter selection. We told it that we're using the 1 minute data, which I just showed you here. We defined the default periods. The default periods from the initial script was 20 and 50. So 20 minutes over 50, way too. So that's a 30-minute gap, right? We have a 10-minute gap, which is I found to be a lot more successful. So that 10-minute gap is showing us a lot better movement than this 30-minute gap. This is entirely too slow, right? So we initially started with 3, 2. So that's a 2-minute gap. And then we were able to stay, okay, you know what? Let me go to 3, 8. That's a 5-minute gap, right? But this is not where we landed. This is just where we started, right? So super trend, the explained formula equals the band equals the price times the factor times ATR discussed. This was too tight. So then we finally landed on 2.8 in a period of 8. But again, this is when we initially started. This is only step 2, right? Step 3, we talked about the session and the trading rules. This strategy only trades between 9:33 and 11:08 a.m. for only 95 minutes, only 1 trade per day. So how it works is both the moving averages have to cross and the super trend must agree on the direction. So if they're conflict, if the moving average says call, but the super trend says bearish, we skip the signal and we keep scanning. If there's no valid signals for the session, we just end the day with no trade. We don't force trades, right? So we're looking for a very particular signal, and this is what it is right here, right? So this is the basis of the strategy, right? So this is how we filter out the noise, quote unquote. All right, so let's keep going. This is our exit rules. So once the signal fires, we only hold it for 2 minutes, right? Maximum. So we got 2 minutes to either make 25%, 18%, or 14%, or if the position goes down to 14%, right? And I'm still, this is just the initial rules. So we're just going to break it down. I think right now, so we see step 3, we're at like step 19 right now. So we're just going to go through this so we can understand. And then once we get to step 19, you'll see how it evolved. So what this is saying is that if the position, we're starting at $100, all of our strategies start at $100, which is going to start right here, right? Because we want to be able to dispel the notion that you need thousands of dollars in order to trade options. No, especially when it comes to this algo trading and automated your trading, right? What we're doing very, very particular, right? I'm not just going straight as like, hey, I have an idea, I have a strategy and building the bot. No, I'm back testing the strategy. So, lack of better words, I'm training the strategy, right? I want to be able to say, it basically has to put time in the gym, right? Like you wasn't with me shooting in the gym, so why are you trying to be out here playing a game with me, right? So in essence, what we want to be able to do is make sure that it's putting up enough shots, right? Putting up enough shots, right? And then once it crosses a win rate, I mean 65, 70%, I mean anything above that, you automatically, all right, go ahead, I can put you in the game now, right? And put you in the game meaning now you're ready for paper testing, right? And what I just did, and I appreciate you all for being able to share this with me, is that I just opened the account with Thinkorswim and I'm waiting for its pending approval right now. So hopefully, fingers crossed, within the next 3 to 5 days, hopefully a little bit sooner, I can be able to have Thinkorswim. I mean, I do have the account, it's approved, but I need the API, right? And that's how you algo trade. So what is an API? All right, so let's talk about API real quick. API is the application program interface. It's a set of rules that allows different software applications to communicate and exchange data with each other. Data, right? So in order for us to be able to algorithmically trade, we need API access, right? So for lack of better words, it's just a set of keys to the house, right? So what I need is the keys to our TradingView, to Thinkorswim, right? So we already have the account open and it's already ready to go, but I need the keys to that particular account so we can be able to trade programmatically, right? So whenever the strategy or the bot does find a signal, I don't have to go in there and submit the buy or sell order. The bot can do it by itself. And the way we do that is through API access. So right now I'm waiting for API access. And once we get that, oh, we're on and popping, right? So I submitted the application. I think it was on Saturday or Friday. I think Nadir. So again, shout out to you. Really do appreciate you for being able to lace me up with that. I submitted it because I did initially. I don't know why. Because when I was doing research, TradingView didn't come up. I keep saying TradingView. Thinkorswim didn't come up with being able to have API access. I only saw Tradier, which I already have an account with, Alpaca, IBKR, which is horrible for running multiple bots. Alpaca and Tradier like are really stepping up to the plate right now and being able to run it. But I want to run it with Thinkorswim because I think I'm used to the platform. I've used it before in the past. I just didn't think that I can do it programmatically. But nonetheless, I've talked enough about that. All right. I explained the stop loss, our position sizing. Even though we're starting with $100, right? The strategy does grow. So this is how we manage the strategy as it grows. If it's less than 500, we can use up to 84%, right? So if we're starting at $100, we can use up to $84 per trade until it grows, right? So if it's between 500 and 1200, we can use 44%. Anything greater than 1200, we can use 20%. Option selection. So what is delta? So when it comes to options, there are really like five. There's I think like 8, maybe 12 Greeks. There's only 3 that I really care about, right? First one and one of the most important ones is going to be delta. So what is delta? Delta tells us if the option or the underlying asset moves up $1, then our option contract is going to move based on the delta, right? So if SPY moves up $1, then if we buy an option contract with a delta of 12, then this contract moves $12 for every $1 the stock moves. Why? Because there's 100 shares in the one option contract, right? So you take 100 times 0.2 and you get 12. So for every $1 move, we're getting 12. For every $1 move, we're getting 60, right? So you can see our deltas are quite a big range. Delta also lets you know the probability of profit, right? So here we have a 12% chance of the option being able to expire in the money. And here we have a 60% chance of the option being able to expire in the money. All right. And then our premium, we're only buying options between $10 and $40. Our min spread, right? Because if the spread is too tight, you're not going to be able to get out of it. So that's why we have a maximum spread of 10. And 0 DTE, we're only buying options that expire the same day, as you denote here. We're only in the position for 2 minutes. I'm looking for quick profit levels, right? And if a position goes against us, 15%, right? So we're starting at $100. So if it goes down to 85, right, get me out of the position, right? All right, beautiful. This we already talked about option selection. This is our strike selection. It's based on the Greek open interest and then the quotes, the bid-ask spread, and then the open, high, low, close. This is how we're going to score it. And we have a toggle that we're going to use an IV rank. What is IV? IV is implied volatility. So if you have high IV and an option contract, that is going to bring the option contract to be a lot more expensive because IV is volatility. So it expects a big move, right, within the time frame for that particular option. So since we're buying 0 DTE options that expire the same day, so it's expecting a big move that day. So if we're using high IV, the option contract gets a lot more expensive. Low IV option, we're not expecting a big move, and the option contract is a lot more affordable, right? So this is a toggle that allows us to be able to select the option contract based on IV, but I can switch it on and off depending on how it works. Here's the back test that we created in this reference back test. Here's the back test that we built. And what I'm going through right now is the steps on how we created our algo strategy, right? I already went through the initial steps. I'm on step 9 right now. We built the back test, right? Load our data, our indicators. We already talked about how the signals are triggered. We already talked about the option selection, the position management, the backtest engine, and it's Python. The reason I'm using Python and not C++, and I'm really going to consider C++, right, is because I'm not doing 100+ trades, right, a minute. This bot only trades what? Once a day, right? Maximum trades per day is 1. So Python is more than adequate enough to be able to manage running this bot for me, right? So eventually I am going to get to use C++, but not right now. Python, like it does more than what I need and some, right? And I learned through Python. When I first started being able to like program, I learned through Python, and I was learning how to be able to create AI agents, because that's what I thought I wanted to do, is to be a AI agent software engineer, right? I mean, I know that and it's in my bag, right? Don't get me wrong. But I found algo trading in July, and it's just been extremely advantageous. And I've been streaming my sessions since like for about 4 or 5 weeks now. So again, I'm completely new in this. So I want you to know, if I make a mistake, I make a mistake. But I'm honest enough to be able to let you know, hey, I think this is wrong. But nonetheless, let's keep going. Our data structure. Okay. Now we get to. I kind of want to. I want to save. Okay, because I want to run the back. Let me run the back test real quick so you can see it. So let me just make sure what year. No, okay. Before I run the back test, let me. Okay, which one? Let me run the back test, and then we're going to talk about the results of the back test. I don't need Claude Code right now, and I'm going to be using Claude Code when we actually get started with our coding. But right now we're setting the stage, right? So you all can be able to understand what we're doing, how we're doing it. And if you want to see part 1, it is in the comments and the descriptions, so you can really get more of a preface on how we really got here. But what I'm doing is just high level overview. So we're running our back test on 2023. So we did update a few parameters, right? So you remember before we started at 3.8, but now it's at 212. So there's a 10 bar gap. Our period is 3 for the super trend. And then this is our delta selection, how we select the strike. We are using the IV. The exit rules are no, we got a little bit tighter, right? Remember, we started at 14, now we're at 12. Now I let it hold it a little bit longer, right? So now let's go ahead and gauge the results. Now I'm running it on 2023, and how we run our back test is we split it up. So the first half of the year is going to be training, and then the back half of the year is going to be validation. And what I need to create today is a market regime filter, and you're going to see why. And all of our strategies start at $100, as you saw here. It's loading 16 million data, right? So I need you to just to be a little bit more. Okay, here we go. I can stop talking. Back test is running. So it started at $100. Right now it's at 162, 221, right? So it's oscillating between like 150 and 250, right? So here we go. Back test is running. If you do have any questions in the interim, please don't be afraid to ask. We're here to be able to grow together, right? 221. All right, beautiful. Now the back test is doing its thing, so I'm just going to be quiet and just allow it to work. If I do see something that's worth noting, that I'm going to let you know. So one thing I did notice, and it took us a while to be able to get here. I'm not going to hold you. And I want you to see what the back test is and how it runs. And then I'm going to go back to the steps and just finish that up. And then we're going to continue our work. What we have to be able to do today is create a market regime filter. See, it just jumped. Y'all saw that? From 691, right? It made a cool $700, right? $1,400. That's crazy in 3.5 minutes. So that's why I love options and not necessarily. I mean, yeah, I can create one that does penny stocks, or even stocks itself. But I mean, we get a lot more explosive moves with options, right? Because we're getting 100 shares, so 100 stocks in one option contract, right? And just cross 2,000. Started at $100. This is the first 6 months of the year, right? What month are we in? We're in June. So the strategy backtest is about to finish for the first 6 months of the year. If you want to see how we get there, bro, AI is better at programming than I am. I feel, yeah, no. What's going on, Michael? Hope all is well. Yeah, most definitely. I'm not going to hold you. AI is definitely the cheat code when it comes to programming, but you got to be able to, it has to be a balance, right? Like you still have to understand the underlying, like what it's doing, right? As long as you understand what it's doing, being able to use like AI to be able to code, I think is the wave. Like, and I especially can't wait when we can do it like via voice, right? Like right now, there's a lot of manual typing, right? So in essence, how I think of it, you remember Marvel, what is that? Iron Man, Jarvis, right? So I can't wait to get to a point where we have like Jarvises in the world where we can just talk to it, and but still controlled in a way, because I don't want nailnet to happen, right? But still in a way where we can be able to like do more with it, because I really think it is the wave, and being able to program with AI, it is definitely beneficial. But again, I still would recommend that you understand the underlying language. Like I know Python, so being able to I can go straight to C++, but I don't know C++ that well, right? So the backtest is running on the second half of the year, and this is why you're going to see we're going to need a market regime filter. The first half it just finished up. I think it was like 2,300, whatever it was. And you're going to see what the back half of the year does. Yeah, no, but I agree with you. It is. But like being a junior dev is still something big up, man. Like not a lot of people could say that. I mean, it depends on the role. I don't know. It depends on the role too. Is that what you do? Or you just code for fun? Who does code for fun? I don't know. I think coding for fun, I didn't mean to disrespect it. I don't know. I want to say coding for fun. Coding to learning. And what is the language that you primarily use? So you see it just crossed to 207, but again, it's not as explosive as it was in the first half of the year. So that's why I'm going to need a market regime filter. And we're going to create that today using Claude Code, IEAI, in order to help us do this. So, I mean, I'm not going to hold you. There's still some room for us to be able to grow for the back half of the year, but I don't know. In my eyes, if you were to be able to make go from 100, right now I'm setting up programs. I showed you. Oh, okay, yeah. Oh, speaking of that, I just the AWS Activate. I submitted the an app for that, so I'm waiting to hear back from that. So if I get approval from that, oh yeah, I'm gonna bring SageMaker over, and we're gonna do a lot of projects. Like I'm really gonna tap in and being able to go crazy with the machine learning from what's using SageMaker. So as soon as I get approved from that and I get the credits, yeah, it's gonna be legit. Oh, that's what's up. Oh, okay. Oh, that makes sense now. That definitely makes sense. Where did you get your certs from, if you don't mind me asking? No, so what certs? Is it just like necessarily machine learning? Is it AI? Is it for the storage? All right. So as you can see, the training 124 trades, 65% win rate, return. So I was able to go from $100 to 2,100. Sharp ratio is kind of trash, but still, it's relative, right? If you're looking at the returns, the average return is about 10%. Validation, a little bit more trades. It's still a coin flip as far as the win rate is concerned. It went from $100 and then it went to 74. Um, oh yeah, no, 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 definitely, definitely. I understand. Like take your time with it. Best of luck. If you're still working on it, and like, yeah, no, definitely. I think that's something. If you could be able to get the more search, the better. Like right now, I really want to focus on like doubling down on machine learning, because I mean we don't need it, right? I can just create algo bots and like do that with my eyes closed. But if I can add machine learning, not necessarily to predict the price, right, but to predict the probability of profit, POP, I think that is going to be a wave, right? So what it'll do, it'll look at a contract and it'll say, all right, we're thinking about buying a put, right, for 477, and then I want to train it to be able to say, all right, you have a 30% chance or 40% chance, whatever it is, in order to be profitable for this particular contract, right? So I can add it, so I can use that in addition to a strategy. So if I get access to SageMaker, I'm going to create that here with y'all. It's going to be definitely legit. Oh yeah, no, I agree. I definitely agree. You just got to be able to get your cert game up, and like I just pair that with languages. Oh, you didn't tell me what language you use. Are you a C plus plus? Is it Python? Oh yeah, no, tapping down into the not necessarily just the developer, but the cloud. If you be a cloud architect or software engineer, oh bro, that's a wave too. But I don't know. I don't think AI is going to take that job away, because I still think SageMaker Studio Lab as well. Oh, that's what's up. So machine learning. Yeah, no, I think, yeah, if I get access to machine learning, I'm going to show y'all step by step by step, because I did it before, but I had to pay for it. So it's like, all right, I wanted to bring it in, but we're not to this point. I kind of don't need it. It's a luxury, right? It's not a necessity, right? Because we can still do well, and I can still get this strategy up into a point where like it works and it does well, right? So, but when I want to add that luxury, oh, okay. So front end, back end. So you got your back end Python, front end React, JavaScript, etc. Oh, okay, that's what's up. So you're gonna be a full stack developer. That's what's up. I tried TypeScript. I mean, I know it. I can read it. I can understand it. But the application of it, bro. That's why I just stick to Python, man. But big ups to you. Being able to get that in your bag. Also worked with Java, C++. Oh yeah, no, definitely. Got you. Don't put. I mean, more age and more experience. Yeah, I feel like we all in college. No, I get it. Don't worry, I get it. I feel like we all in college, like we all took those like starter programming classes, the C++, object oriented programming, Java, HTML, right? So I feel like, yeah, I know it, I can understand it, but it's just a matter of being able to apply it, right? That's where things get kind of fuzzy, right? So that's why I like Python. I know that because it reads like a book, right? And I can really appreciate it. You want to know, like, let me show you a quick example, and this is just I'm just bullshitting right now, but let me just show you a quick example. So write two files, hello world, one in C++ and one in Python. I mean, who didn't? I feel like I went and I want to show y'all the difference between this. And right now, again, it's not needed. I'm just proving the point right now. C++, 7 lines of code, just to type out hello world, right? Python, supposed to be, okay, that's bullshit. Python is just print hello world, right? That's 1 line of code for hello world, right? C++, bro, them are 7 lines, 6 lines of code. So that's why I'm like, all right, I know it and I can be able to like get through it. Oh, fair enough. No, but TypeScript and Java, yeah, TypeScript Java is like a different gang. Like I get it, but like if you can really, really understand it, and like if you can really be a dope full stack developer, and I think that's where you're leaning right now, to being able to understand. Fair enough. Oh, really? Okay, fair enough. See, I'm not that well versed in C++ or um what is that TypeScript. I mean, I understand it, but yeah, one day I am really going to go deep into it so I can understand that bit. A system outprint. Oh, system outprint. Hello world. Oh, fair. See, fair enough. Fair enough. Fair enough. See, that's what I get for using AI. I know the one-liner in Python. I didn't know the one-liner in C++, so I appreciate that. I appreciate that. Oh, what about the console out? Can't you use console out or console in? Is that the same thing? No? Is that a different language? So that's the thing about language. Oh, and you needed to compile it. Yeah, no. Facts. The compiler, the terminal. So that's why I'll use it as a compiler. No. Yeah, see? That's why I'll just stick to my Python for right now. But eventually I'll get to C++, but I really want to just understand a little bit more, right? So like Python, I know that, but C++, we're going to get there. Oh, all right. So let me get back here so we can finish this up. So as you can see here, that's why we're going to need to build a market regime filter, because, oh, fair enough. See, I need to get deeper in that bag so I can really understand it. Definitely. But oh, see, yeah, I told you it was console log. Hello. Oh, it's JavaScript. See, they just get jobbled up in my head sometimes because, like, again, there's a lot going up there. So it's like, all right, I know it, but then I don't. So yeah, so I was getting confused with JavaScript. I know console was one of the ways to be able to do hello world. I thought it was C++, but I was wondering. Okay, fair enough. And then JavaScript, TypeScript, React, all of them same family. That's your front end world. I mean, I know it, but I don't know it as well as I know the back end, as like the Pythons of the world. Definitely. I mean, I feel like I should just make the file. All right, so let me just finish up these steps, and then so you can understand where we started. You should learn quant developing both to help you with the project and because they use, yes, but most of these quants in the back end, if they're not using, I mean, I think they're using Python in order to get it up. But I mean, what is a quant, right? Like they're using, and it will help you to get a job if you figure out the trading bot. Yeah, I don't know. I mean, if I could really figure out this trading bot thing, what's the point of getting a job, right? And no, I completely understand that there's transferable skills, excuse me, that I want to be able to use. I mean, worst comes to worst, yes, I can definitely go get a job to be able to not necessarily just be a quant, right? But like I know how to create AI agents. I do know machine learning. I don't know it as well. Like what's my bag is like AI agents. So I can be a AI software engineer without a problem. So I can go get a job with that, like without an issue. But what I want to do is what I'm doing now is being able to like stream different coding sessions, whether it's algo trading bots, like which have been completely successful. That's why I want to take the time to be able to go through these steps, right? Because this is legit how I'm doing it step by step. I used to, yeah, no, big facts. This is what they do, but they're not going to share it as much, right? Because their thing is like, oh, bro, I don't want to give away my alpha. I don't want to give away my alpha. I don't want to give away my edge. But you got to think about it. Yes and no. That's why I'm doing different assets, right? Not necessarily just the same asset. So I have a spy bot. This is a XSP bot. I have a QQQ bot. I have an IWM bot, right? And they all do different things, you know? So I really don't care about being able to show y'all how I get to create the strategy, right? Because I mean, at the end of the day, my goal is to be able to create one strategy a day, one bot a day, right? Until I can really, really understand it and really do it with my eyes closed. Like I'm comfortable with it, but I'm not to a point where like, all right, I could do it in 30 minutes, right? It still takes me legit. If I'm not streaming, it takes me 90 minutes to be able to go from research idea. Yeah, no, I agree. AI agents are fun. LangChain is kind of trash. It's not trash, but it's like overly complicated for no reason. Like overly LangChain, LangGraph, bro, it is overly complicated. It is beautiful if you understand like how to be able to like work it and use it. But when I was doing it, I would use Crew AI, Llama Index. So if you okay, let's, all right, little bit of a detour, Crew AI. I would build agents from using Crew AI, Llama Index. There we go. Llama Index is another cool one. LangChain, what you were talking about, it is good. Don't get me wrong, but it's overly complicated for no, like they're legit. I'm not gonna hold you. Like this is, I want to call it like enterprise level agents that you can build, and it's extremely good. But like you can do the same thing over here, and it's half of the fucking code, half of the complexity. Llama Index, if you want to build a RAG agent. What is a RAG agent? A RAG agent is when you build an AI agent. So an AI agent, so think of ChatGPT, but ChatGPT on top of a database, right? So a RAG agent is being able to have an LLM on top of a database. Those databases are called vector stores, and they pull the information they need from it. Yeah, hold on. Yeah, Crew is good. I agree with you. I feel like if you're not coding them yourself, yeah, no, definitely. But it's all depending on which LLM you're using. Like when I first started, I only would use OpenAI because I don't know, was a little biased towards them. Because when I first started, and I learned through Udemy. I learned through YouTube. I learned through boot camps, and like just the first 90 days is going hard. Oh, embeddings, yeah, vector stores, go in the embeddings, but you got to be able to create your chunks. You go to your chunks to your embeddings. The embeddings are just the binary languages, right? It takes this is words that we can see, right? We understand. If you want to turn this into an embedding, right? It's just ones and zeros, so the computer can understand it a lot better. Yeah, nah, so that's my bag. So like I know AI agents legit, right? And I can be able to go through that. And like I say, if I wanted a job and do that, I can. But like I'm finding a lot more success being able to do this. So if I can get to a point where these things are cool, it's legit. And so that's why like I don't care being able to show y'all like how I go from step by step by step, because most quants are not going to do this because they're saying, "Oh, I'm giving away my alpha, I'm giving away my edge." But I'm thinking like, all right, we're getting more people in the market, right? More people to being able to automate their trading. I'm not, as soon as when this bot is ready to go, I'm not embeddings are just the vectors you store in the no, facts. Embeddings are what you store in the vector. No, agreed. And that allows the RAG agent, right, to pull from it. So I was just using high level to embed and unembed. That is the question: to embed or unembed. That is the question. That's hilarious. All right. Yeah, S3 vectors. I used to use. I'm not gonna hold you. My vector store of choice was Pinecone. Pinecone was legit. Pinecone, there's nothing wrong with it. Plus, you get a lot from Pinecone, right? So this was my vector store. Whenever I still build agents, because again, you get a lot from Pinecone. Oh yeah, similarity search, yeah. Nah, facts. Um, KN search neighbor, big facts. So that's basically that's a strategy. Matter of fact, you talking about KN. I used the KNN in another strategy that I built. Hold on, that's real funny. Let me just pull that up real quick so I can show you that. Where is it? This was another strategy that I built. Like, oh fuck, where is it? I just win. And that's really cool that you said that, because like I just used KNN and I was going to bring it to y'all, but I haven't. Oh shit, where is it? Hold on, I have it somewhere. Oh, here it is. Here it is. Boom. No, wait. Oh shit, I'm gonna find it. But yes, I was using the KNN and the closest neighbor as a strategy to be able to for QQQ. So that's funny that you said that, because I was just using it. I can't find it right now, but I know it's here somewhere. I'm gonna come back to it because I know it's here somewhere. All right. That's what it does when it searches for the information in the RAG database. It creates similarity search. Big facts. Big facts. So what I was doing with this strategy, I was trying to create machine learning, like a baby machine learning, in a strategy where it would use it as a confirmation for the necessary for that signal. And it went well. But again, there was just a couple of things I had to tweak in it. So when you brought that up, I was like, okay, I was using the KNN for machine learning when it comes to like being able to use, but baby machine learning, right? So what I mean by that, I would use like a Python, I think script, Python package to be able to do it. So no, I agree with that, and that's how it would search for the okay. If we look at the past 3 bars and then being able to store that information, and then being able to search and figure out, okay, you know what, based on the past 3 bars, is it going to go up or is it going to go down? So something cool. That's what it does when it searches for the information. Yeah, no, it is, but again, I didn't want to bring that to the forefront yet because that's still a lot more. There's still a lot more work that I'm filtering out for that one. Like these algos that I'm building here, anybody can start. I'm saying anybody can start. It just takes a little bit of determination to be able to push through the things that you don't understand. That's why I created this step-by-step book, because it really just breaks down how we got from step 1 to step 19, where we are right now with this back test. And we have to be able to also, Convex has a super easy to use database and vector store. Yeah, I agree. I think when it comes to the actual provider, it's tomato, right? You just have to find one that you're comfortable with. And once you find one that you're comfortable with, let that ride. Let that ride. All right. So what I need to do now is, let me go ahead and open up Claude Code. We need to create a market regime filter. So give me a second. I'm going to be using the 4.5 Opus model. So what I need to do, I need to close you. Boom. FYI, LanceDB is a vector store you can use with Python. Oh, really? You said LanceDB? You be lacing me, man. LanceDB. Fair enough. Designed for multi-model build. Multi-model, you can use OpenAI, fucking Anthropic, Gronk, all in one. So that's what multi-model means, built for scale, from agents to model, from searching to training, one platform for all your AI agents and workloads. All right, I'll check this out. Yeah, AWS has Pinecone as well. Oh, AWS, yeah, no, facts. That's why, like, I want to get in with AWS. If I get in with AWS, oh, it's game over. I'm really going to bring SageMaker, so we can do the work there. Fact. But again, I have to get in. So once I get in, then we'll be able to start the work. I submitted the application, and then yeah, no. It's all depending on like what we're going to use it for. So I don't know. Start for, yeah. Be leery of that. But you're not telling me how much I'm getting. Start for free. Fair enough. I don't know. I have to really look at this. I'm just like taking a quick peek now, but I don't know if this. I don't know. I'll take a look at this a little bit later, LanceDB, and see how it compares to, because again, with Pinecone, you get a lot for this free plan, right? You get a lot. Like, you really have to be bullshitting to go over how much of the storage that you get with them, right? So that's why. Let me just show you real quick. Where is it? 2 gigs, bro. And that's a lot. You got to be bullshitting to be able to go over that. Then after that, you just have to pay, right? But 2 gigs is a lot when it comes to being able to use vector stores, right? Because vector stores, or the chunks that goes to the embeddings, they get broken down, right? So you really just have to be bullshitting to be able to go through that. And up to 2 million monthly writes, that's a lot. Read a million monthly reads, that's a lot, right? Again, you have to be bullshitting to be able to go through these. No, you only use Lance locally, but you don't pay. Oh, fair enough. All right, yeah. Like I said, I'm going to get into it, but I'm really going to get into this AI agent stuff a little bit later. I really want to knock out this algo build, but no, I agree. I could talk about that all day, because that's my bag. Like, that's where I started. It wasn't until like July, I picked up this algo trading. And I was like, yo, transferable skill. A bit. So I was like, yeah, I love it. To use it free. Fair enough. Fair enough. All right, no, I'll definitely check it out. I'll definitely check it out. So what I'm gonna do, we're using Claude Code, and then what we need to do today is create a market regime filter, and then finish up our strategy. So as you can see, I mean, should I close it? But one version, the first 6 months was 2,300. The last 6 months was $75, right? So we need to figure out, okay, a little bit more parity. So that's why I want a market regime filter. So I'm thinking that I may use TradingView in order to help us just build that, or build it ourselves. Let's see where we go. But first, I want to build context. In order to build context, what I want to say is, what do you know about option algo bots without reviewing our code base? How long have you been doing this, Mike? as far as like, um, or excuse me, better question. When's the last AI agent? What's the last AI agent you built? I already have this, so I can kind of delete that. All right, beautiful. So we built the context. So now what I can do is just say, okay. All right, perfect. Now review the following steps taken, journal, and backtest code, and explain to us like we're 12, but in a non-condescending nor demeaning way, like a professor talking to their student. All right, beautiful. I should have told you to use. Oh, let me just make sure. All right, beautiful. And I'm not gonna hold y'all. I've noticed that Anthropic has gotten really better with not letting this Opus model eat up all your code or all your tokens. Because before, whenever you use any Opus, whatever model, it would eat up all of your little tokens. Right now, I'm seeing that I can use it a lot more without having to switch to Sonnet. So let's see how this stays. Because right now I'm at 5%, and I just started. We have 3.5 hours, about 3 hours left for this session. So let's see if I can just keep using this 4.5 model. All right, beautiful. All right, let me break it down in a way that makes sense. What you've built is a robot that trades super fast options. So imagine you are on a track watching horses, and you've built a robot, horses. So it wants to go to, yeah, that's crazy. Built a robot that watches the race. The stock price moves every minute. It looks for a specific pattern, the two lines crossing, and we talked about the way that the two lines crossing, right? We have a fast moving average, which is the second moving average, so it looks at the past two, and then a 12 moving average. So as soon as the second goes above the 12, then that's how we have a bullish signal. We think the market is going to go up, and then we need the trend confirmation to make sure it's real. And if it goes below, we have a bearish signal. We think the market is going to go down, and then again, trend confirmation to make sure it's real. We buy lottery tickets. These are cheap options that expire today, and we sell it within 2 to 3 minutes, hoping that we make a quick buck. There's two patterns. The pattern one is the moving average cross. Think of this like two snakes following the cross. One wiggles fast, the 2 bar. One wiggles slow, the 12 bar. When the fast snake crosses over the snow snake, that is a buy signal. I like mine's better. I think I did a better job at explaining this. This whole snake wiggling shit is weird. Um, we're betting the price goes up. When it crosses under, we buy a put. We're betting the price goes down. The super trend confirmation, this is a safety check. It draws an invisible band around the price. If the price is riding above the band, this trend is bullish. If it's below the band, it is bearish. Robot only trades when both patterns agree. So we have to have the crossover, and then we also have the confirmation that we're heading in the right trend direction, right? The fast snake says up, but the trend says up. That's a go. Our journey, we went from version 1.0 to 1.9. Version 1 was a disaster. We started with $100. We ended at 12. So we really was at the bottom. We lost 88%. The settings were wrong. Too many trades timed out before hitting profits. Version 1.1 to 1.3, we were getting better. We tweaked the dials. We made the super trend a lot faster, right? Catches the trend earlier. We widened the moving average gap because when we first started, I think the gap was 5. Now the gap is 10. Fewer false signals. And then we allowed pricier options, more responsive to price moves. So version 1.3, we turned $100 into 4,200. First times that both halves of the year made money. Version 1.4, we tightened too many things, right? We went back to losing in version H1. Lesson learned. Big discovery, version 1.5. We tested on 2023. We found the problem. H1, the market was trending. We made 1,700 and we peaked at 21. H2, the market was choppy and we lost it all, right? We ended up at $75. The robot is a trend follower. It's not a leader, it's a follower type shit. When the market moves in a clear direction, it prints money, but when the market bounces around sideways, it gets fooled around over and over and bleeds out. The numbers, what the numbers mean, the time stop, the trade ran out of time before hitting a profit or stop loss. TP 1, 2, and 3 hit your profit targets good. Stop loss, losses get cut early. The time stop being too high, 45 to 70%, means that most trades just sit there. Don't price doesn't move in 2 to 3 minutes or hit the targets. Where we are now, the robot the robot works when the market cooperates. The problem is when the problem is knowing when that is. The next step, which you identified, is to add a market regime filter, something that says, hey, the market is trending go versus the market is choppy sit out. Ideas are an ATR threshold, average true range threshold, VIX levels, and VIX is the volatility index. It allows us to be able to gauge if the market expects something crazy to happen or something loose to happen, right? Or just calm, or ADX indicator. Bottom line, you built a working scalping bot for 0DTE options. You can make crazy returns in a trending market, but we'll give it all back in a choppy one. The code is solid. The challenge now is to figure out how to tell good days from bad days before we trade. And I'm not going to hold you. This is when the probability to profit would have came into play here, but we're not there yet. All right, so now we have to make this regime filter. All right, let's go to TradingView. And then what I want to do is put in a regime filter, fam. And let's see what we get. All right, regime filter, regime indicator, EMA filter, MTF regime filter, oh, look at that. ATR regime filter, median, and P70. Maybe. Market regime filter for Bitcoin, momentum regime filter, BTC, MAG 7 plus VWAP confluence regime filter, simple moving average. All right, EMA regime, trend plus momentum zones. All right, you can give us that one. Simple moving average with regime detection. I'm not going to hold you. This ATR regime filter is what I'm liking. What do y'all think? Or this I don't know what MTF is. EMA is the exponential moving average regime filter, or this regime indicator, the wave hunter. Excuse me. Let's try the wave hunter. All right, the regime filter indicator. So what I'm going to do is I'm going to open up this source code. So you saw what I did. Let me just do that over just to make sure y'all understand. I clicked on indicators, right? And I'm just going to paste regime filter. And then what I'm doing is I'm taking this regime filter indicator from the wave hunter. So I'm clicking the source code. You see these brackets here. I'm going to click on the source code so I can open that up. So this is a Pine script. So everybody has their language, right? I just spent a little time with Mike there talking about different languages, right? So Pine script is the language that TradingView uses in order to create their indicators. I wouldn't recommend trading bots on here. Just go use a broker, whether that's Thinkorswim, Tradier, Alpaca, IBK. Don't use IBKR, but if you use it, if you know how to use it, if it's just one bot, then cool. But I run multiple bots. Oh, this is BTC as well. This is interesting. So if this is BTC, all right, bet. Watch this. The Wave Hunter, this one is Bitcoin, so I don't want to start there. What I'm going to do, I seen another one. Directional regime filter. Yeah, you're not. Where's that? EMA regime filter, Professor X. Regime indicator. What do y'all think? Okay. Let's go to EMA regime filter. Let's see. ATR, EMA. Okay. Weak bullish. All right. I can take this. I want to make it faster. ATR 14 is way too slow. Neutral zone, bullish regime, bearish regime. All right, I can take this. Beautiful. So we have our filter. What I'm going to do is come back over to our code. Now what I want to do. All right, bet we have a starter or foundation of what we want to use to build out this regime filter. Review the following Pine script. Then let's discuss. Keep your responses under 528 total tokens for output response. Same guidelines as before. All right, here we go. This is a smart regime filter. Here's what it does. There's 3 states. There's +2 over +1. This is a regime filter, strong and weak. -1 over -2 over -1. This is a bearish regime filter, and 0 is neutral, choppy, no trend. How it works: the strong bar detection. If the candle bar open close is bigger than the ATR times 0.5, this is a significant move. Regime activation. Strong bull plus the close. This is entirely too slow. EMA 22. I'm probably gonna have to drop that to like EMA like 5. This is 22 minutes. So it's waiting 22 minutes in order for it to move. So that's entirely too slow. +2. Regime decay. If the 10 bars pass without a strong move for your direction, the regime resets to 0. This catches when the trend runs out of steam. Weak states is if the strong opposite bar, but the price still closes on your side of the EMA equals a weakening trend. Why this fits your problem? Your mixtape bot bleeds out in choppy markets. This filter would only trade when the regime doesn't equal 0. It matches the regime direction. Greater than 0, calls only. Regime less than 0, puts only. Avoids regime with weak regimes or even tightening filters. All right. The periods being used is a bit too slow. We are thinking about using either EMA, exponential moving average. We're thinking about using EMA 3, 5, or 8. Let's discuss how this would work before we implement it in the backtest. All right, bet. Here we go. Here we go. All right. Good call. EMA 22 is very slow for your 22.5 to 3.5 hold time. Let me think this through. EMA options with 3 minutes of data. Ultra reactive will be a coin. Will flip often. EMA 5 reacts, but slightly slower. EMA 8 more stable, fewer flips. The trade-off: faster EMA catches regime changes quickly, might flip to neutral mid-trade, which would give us a false trending signal. The slower EMA, more confident regime calls, but might be late entering a new trend. Your trade could be over before the trend confirms. My thinking: your signal fires on 2 over 12 cross. Your max hold time is 3.5. Bet. The EMA 5 would be a sweet spot, fast enough to react within your trading window, slow enough that the signal noise doesn't flip. It sits between 2 and 5 and acts as a middle ground. The real question is, which time frame was the regime won on? The regime would run on the 1 minute time frame, and we are liking the idea of starting at EMA 5 and potentially making the ATR threshold a bit more aggressive to start. Then we can tighten as we review backtest results. Make sense? Batman, I really do appreciate y'all for sticking around and being here. Don't forget to like and subscribe if you're not already. If you do have any questions about what I'm doing, where I'm at, and the process, don't be afraid to ask. Oh, interesting. Makes total sense. Start aggressive, then tighten based on results. So we're doing EMA 4 instead of 5. Bet. Between your EMA moving average, not exponential. This is just moving average. EMA 2 and 12, reactive but not twitchy. More aggressive than 0.5, catches more significant bars. Inactive, keep for now, can tune later. That's kind of hard. All right. Before scanning for the MA cross, the check regime state. Okay, skip the day, waiting. No, but you're not skipping the day. Tuning. Okay. Wait. Before question. We do not want the strat strategy to skip the day unless it is choppy. If too many signals are filtered, okay. It's too many signals, optional, weak, may skip. Okay, skip the day or keep waiting to skip unless it's choppy. We will keep waiting until it is flipped to bear or bull, but don't trade on choppy. Let's make sure the math works out. Let's run a few quick terminal commands to ensure good before implementing it. And you can start with EMA 4 and ATR. Before, explain to us, increasing the number, does it make the palms tighter or looser? Okay, because I'm having an idea. I just want to make sure that we're on the same page. Let me give it the conda environment. Run the terminal commands, then advise. Okay, so here we go. Good catch. Let me clarify. The higher ATR threshold is tighter, more restrictive. The lower ATR threshold is looser, more permissive. Smaller candles count as significant, more bars qualify. Strong moves, regime activates more easily. Regime flips often, stays neutral longer. All right, so maybe I'm going to drop that ATR to like 0.28, to be really, really low. Because this, I mean, yeah, it works, but I wanted to drop it a little bit more. Want to drop it a bit more, yeah? But y'all are seeing the process, man. Y'all are getting laced up. If you do, I'm not gonna hold you. I really want to aim to finish this before 1. So like in another 50 minutes or so, I'm not gonna hold you. The Dolphins do play. Yes, I know it's a shit season right now, but I feel like they still need my support. So I kind of want to watch that game. So we got like another 50 minutes or so to be able to knock out our work, which I think we can get done. Great news, only 1.8 neutral. The regime always has an option. 46 bull, 41 bear, most good balance. 0 days stuck in neutral 50% of the time. With EMA 4, ATR 4 plus, and active 10, your bot will always have a side to trade. Only set out during brief choppy transitions. Either match a call or put. All right, bet. Double check your work and do this objectively. Then once confirmed, update the backtest, then update the steps taken, include discussion, what we arrived at and why as well in the steps taken, so we can keep account. Then let us know once ready to run backtest. All right, beautiful. Here we go. We're actually coding now. What I need to do, we're going to be running a backtest. So let me get it ready to go, fam. Let me get it ready to go, fam. Here we go. Let's go ahead and install our libraries that we need. Beautiful. So how do you know you're in your conda environment? You see here is base. You see here is Option Baby. Option Baby has everything I need for option algos. So I'm going to clear that. Perfect. So that's ready to go. So what I can do is hit Python mixtape bt.py. So when you're done here, oh, you said you needed to verify. Bet. I appreciate you, man, for listening to me, because sometimes you do go rogue. Sometimes you do go rogue. Well, I appreciate you. I see. Oh, wait. Holy cow. Thank you. That's crazy. My fault. Bruh, stop tripping. Come on now. I said double check, not like spaz out on me. Stop spazzing on me. Oh, logic verify the error was the daily grouping, but the key results printed. All right, beautiful. Beautiful. Now let me update the regime calculation. All right, regime filter. Oh, ATR period of 14. Fam, that's long, fam. I thought we talked about that, fam. Allow me integrate the regime filter into the run backtest. The ATR period of 14 is kind of long, fam. I'm not going to hold you. I'm going to start with 14, but I'm probably going to have to drop that down aggressively. Aggressively, fam. But we're going to see. We're going to see. Verify the syntax. Go ahead. Syntax is Gucci. All right, we can run our back. Oh shit, that's why I copied it. That's why I copied it. I was like, you know what? It could trip. All right, so we're running our back test again. We're running it on 2023. Now remember, the training side of the back test did well, so I'm trying to see if that's going to maintain performance. I want to see if the performance on the validation side, so the last 6 months of the year, if that does improve. So, and what we've added was this regime filter. We talked about what that does. So I'm running the back world pooling. All right, let me look that up. World pooling. Oh shit. World pooling is a brew technique used to separate solid particles or tub from wort using centripetal force to create a circular motion. This is the process often performed after a broil is created. What the fuck? Okay, let me shut up. That's world pooling, y'all. Wait, did we just find a hack? Oh, I told you the validation period, that one slides already. But Hold on. This thing is like really sliding right now. Okay, it just gave back money. So hold on. Let's see if we improved. I think we may have. I'm not gonna hold you. I don't know. It's still giving back too much money for my liking. It's still giving back too much money. Come on, it's okay to make money. It's okay to make money, money, make money. Come on, get there. Get over 4,000. Come on, and get over 5. Stay there. Holy shit, it's giving back way too much. We peaked at 43, 69%. I think that increased. Sharp ratio, still kind of bad, 35%. I think that went down a bit. So we went from $100 to we ended at 34. Signals regime filter, valid days with no options. Okay, so there's 10 days that was skipped. So I think that improved performance a little bit. All right, bet. So this is really where questions are going to be answered, right? This back half of the year to seeing how well that works. So let's see. Let's see. Interesting. So you're seeing that, it's not as explosive as it was in the Q1, but like we're still getting, I don't know, man. Yeah, we're going to need to tweak this a little bit more. That's all right. Going to need to tweak this a bit, fam. Not as explosive. That's Gucci. Okay, but can you hold levels though? See, it just went from $400 to 160. Okay, that's like 7 in a row it just had. Can you hold levels though, man? Okay, the regime filter definitely helped out. um, definitely helped out, fam. So what I'm gonna do, I just want to tweak it a bit. All right. Review using grep and awk, then update the backtest journal. Then let's discuss. Beautiful. We're getting somewhere, y'all. The regime filter, I think, definitely did help us out. And AWS had, okay. Wait, I think we said that already. Beautiful. The regime filter definitely did help us out, y'all. Now it's just a matter of being able to tweak it a bit so it can work out for our benefit, right? So that's what's up. Now I just want to tweak it a bit so it's like it's really helping out. Or should I just keep it where it's at? I don't know. Let's see. It's open for discussion. Now let me update the backtest journal. All right, beautiful. Now we have to file this away. Proceed to do the next one. Perfect. This is organizing our journals for us so we can stay organized for our backtest results. H2 is not only profitable, but that thing is ching 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 ching. Is running, fam. All right. Only 13 signals were filtered. The signal is surgical, not aggressive. It only boxed the trades where the MA cross said one direction, but the regime said opposite. The H2 flip positive. The H2 choppy 2023 that killed the previous version is now profitable. The regime filter is preventing calls when short-term trends were bearish and vice versa. The time dropped from 40% to 44 when the trades with the regime filter. The price is likely more in your direction, more TP hits. The directional balance improved, 46 to 54 calls puts. The regime naturally balances your trades because it forces you to match the market direction. why it works. The MA crosses a call signal, but the 1 minute price action is actually bearish. You buy a call, the price keeps dropping, you lose. Now the MA fires a call signal, but the regime is -2 bearish. The filter says no wait, you skip that trade. Later the price turned, the regime felt bearish. The MA cross fired again. Now you can take it. Next step, consider running on 2024. Try regime strong on. Only trade when strong regimes. Tighten the regime filter for over trading. What do you want to do next? What I'm thinking about is okay, where's it at right now? Where's it at? Where's it at? Hold on. Okay, beautiful. So you see this ATR of 14. I still think that's a bit too long, right? I think I want to drop that to 12. I want to keep the EMA length where it's at, and I want to drop this to maybe I want to keep that where it's at. Let me keep that where it's at. All right. Before we want to drop the regime ATR period to 12 from 14, and then max hold time to 3 minutes from 3.5. I bet. So I'm updating two things. I'm updating the maximum hold time from 3.5 minutes to 3 minutes. And then I'm updating the period from 14 minutes to 12 minutes. So those are the only two things I'm updating with this backtest right now. Let's go ahead and have you update it. I thank you. All right, update the steps taken. Beautiful. All right, now we're running our back test. Now I want to go grab some water real quick, so y'all give me a second. My fault. I didn't even say nothing. Did it improve? Did it get better? Nah, the win rate dropped 69%. Damn. Win rate dropped. It peaked to 43. Did it get better? I don't know, but the win rate dropped. Profit factor is 2.3. So for every $1 we're losing, we're making 2.3. Average 12. Max is average hold time is 2. Best was 11. Worst. Oh, that's beautiful. All right, this is really where I wanted to check it to see how this one works. This is what I really wanted to test. And then after this, I'm going to run it on 24 and see how this works for 24. I don't know. Maybe I need to drop it a little bit more. So that's the thing. This thing is kind of deceiving, right? And the reason I say that is because look, all right, and then like it doesn't want to hold on to the money. It's like it's okay to hold on to the bag, man. Oh, talk your shit. Come on. Damn, look at that. I think we cracked it. I think we cracked it. Holy shit. Get to 1,000. Look at that. Get to 1,000. Come on, we got 1,000. Both halves, we got 1,000. I'm geeked right now. Yo. Yo. All right, I'm keeping this. That's what's up. Now let me see if it works across years. Let me see if it works across years now. This will be legit. Review. And let's discuss. This is legit, y'all. I found the settings. We found the secret sauce that is able to get our strategy up and running. Now, okay, so I guess we have a little bit of a dilemma here. I can either create said strategy using, I knew you were going to do that. Or excuse me, I could create said strategy using bot, using Tradier or Alpaca, but I really want to use Thinkorswim, but I really want to get this strategy trading as well. I have a dilemma. All right. I think I have 3 bots I need to make too. All right. I'm just going to get this one loaded on Alpaca. Yeah. All right. So we're just going to do this one with Alpaca, but I want to make a note where I told you, man, we slapped ATR 10, 3 minutes. Oh, it did improve. Look at that. 400% increase. Final balance. 2.5 times and greater. This dropped a little bit. Okay. That increased. Time hit. Key observation is that H2 more than doubled. Much better performance in choppy periods. The final balance is 2 times greater. Fewer stop losses. The trade-off is more time stops. Less time for TPs to hit. Slower win rate, 66 for 69. Y version 1.2 did better. The shorter hold time plus faster ATR creates a tighter, more conservative system. Less exposure time is fewer catastrophic losses. Faster regime detector is a quicker adaptation to changing conditions. H2 benefited the most in the toppier period, saw fewer big drawdowns. The quality trade is slightly lower, fewer TPs, but the risk management is better, fewer stop losses, and better H2. All right. Let's update the journal, then update backtest so we can run it on 2024. Bet, man, we found something. Yo, I am geek. Review, and let's do the next one. Please tell me you did it right. Regime filter. Okay, beautiful. No, I didn't tell you to run the back test. I did not tell you to run the back test, homie. Thank you. Let's update steps taken. I appreciate that. All right, let's see how 2024 works. Now, 2024 has the opposite, right? So you saw in 23, training was high, validation was kind of low, and we had to improve that. 2024 has the opposite, where the first half of the year, choppy conditions, right? Back half of the year, favorable conditions. So what I'm looking to see is the first half of the year, did we improve, right? And the back half of the year, did we maintain or get better? So let's see. Let's see how it works out, fam. Beautiful. And this one is loading 17 million data points as opposed to, I think it was 16 before. We're running it on 2024, so just give it a bit. All right, here we go. Hmm. Hmm. My little reference point when I know a strategy is like Gucci when it crosses over 1,000. 1,000 is when I know that it can really survive. I'm not gonna. That's me. But from what I'm seeing, I don't want to say nothing yet. See, see, um, see. Okay, drawdown 60. Win rate 56%. Final balance. Okay, signals filtered 5. Maybe I need to make it a little bit more faster. Maybe we need to go from like um 12 to maybe 8, 10. All right, let me let this run. Give me 1 second. I'll be right back. All right, my fault. I didn't expect that to be that long. My fault, my fault, my fault. Let me see. Sharp ratio. Max drawdown. Bro. All right. Maybe I need to put the max hold time back to 3.5. Let me put the max hold time back to 3.5. All right. Review and let's discuss after updating the journal. Bet. Okay. Now let's have them review. After we have them review, we're going to file that away. Oh, you know what I need to do is check my lineups. couple of my fantasy football leagues are, I say, performing well. I'm in second in one, third in the other, and I'm crashing out. And a few, I have four. Two I'm up, two I'm down. Just say that. But I'm making my way back in this third one. I'm like in fifth position. Okay, let me shut up. What this proves: no more regime dependency, death spiral. Remember V 1.5, H3 gave back 96% of the gains. Now both halves are profitable. The strategy adapts to different regimes. Choppy, okay. Still made money, still risk management, only 4. Surgical, not aggressive. Time stop is high. Most trades don't hit, but that's okay because when they do hit, they're profitable. When they don't, they exit flattish, not losing. The key is avoiding the time stop loss. All right. What I want to do, two things. Let's do the next files. And then I have a few more ideas. All right. I'm thinking about dropping this ATR just a little bit further to 10. So I'm going to drop the ATR to 10. And then I'm going to keep that threshold because it's a Gucci call. So let's try ATR threshold of 10. And what else? Do I want to increase the max hold time again? What if I increase the max hold time and drop the stop loss? That'll be something. All right. So that's what I'm going to do. So I'm going to max hold time to 4 minutes and stop loss to 0.10 and keep everything else the same. So I'm giving it more time to TP, but I'm also taking away more time for other trade to turn against us. All right. I like it. I like it. All right. Update the steps taken. I still got to update that. Okay. Bet. So we're going to run it on 24 again. Here we go. While I'm running and waiting for that to load, let me go check my lineups real quick because I was, I think this is the first week Bucky's supposed to be back. Okay, Bucky is still, okay, Bucky is good. So dope about him. Y'all tell me how this team is going to work. Jared Goff, but he already got 20 points. Then we have, Rico Dowdle. Jared Goff, Rico Dowdle, Bucky Irvin, but we had CeeDee Lamb, caught us 24 points. JSN, Jackson Smith and Jigba. What is different? Evan Ingram, Nico Collins, Cam Little. Yeah, it is Cam Little. All right, let me shut up. The back test is running. Let's see how this works now. Let's see how this back test works. Then I'll finish with the lineup. Okay. So what we did is we gave it more time to TP, but I also made the stop loss a little bit tighter, right? So I'm giving it more time to take profit, but not also giving it more time to turn against us. So I made that more aggressive. So let's see how this works out. I don't know. This one didn't. It peaked at $600. We still get back way too much money. I think I need to drop the max hold time. Yeah, I think I need to drop the max hold time because yeah. I'm not even gonna run it. What I'm gonna do, update the max hold time back to 3 minutes. And keep everything else the same. So I want to keep it at 0.10. Keep the ATR at 10 as well. So yeah, let me just go ahead and nope. What I want to do is delete you, fam. All right, so ATR is still 10, max hold time is 3, and stop loss is 10 now. So let's see how this works out. Let's see how this works out for us, gang. All right, while this loads, and then the Colts defense. It's either going to be the Dolphins defense or the Colts defense. Colts are playing Houston. Is CJ playing? CJ Stroud. He's inactive. So that means they're playing backup. That's crazy. Okay. That's interesting. I still have decisions to make there. Both play at 1. Then for this next team, Pat Mahomes, Rico Dowdle, Bucky Irvin, Jamar Chase, GP, George Pickens. Okay, let me shut up. And this is I dropped the maximum hold time to 3 minutes instead of the 4. Let's see. I think we found something. Let me shut up. Let's wait. Still giving back. Come on. It's crazy. 82. Damn, that's crazy. No. Go back to stop loss of 12. 0.12. Keep everything else the same. It's crazy. Crazy, fam. All right, 10, 3. All right, so that just shows you don't do too many things at once, man. Maybe 12 is it. Maybe ATR 12 is it. And I need to stop. I need to stop. All right. Here's my next team. Like I said, Patty Mahomes, Rico Dowdle, Bucky Irving, Jamar Chase, GP, George Perkins, Dallas Goddard, which is kind of tripped on me. My question is, should I start Trey Henderson or Jalen Waddle? And I'm leaning towards being able to start Jalen Waddle rather than Trey Henderson, I'm sorry, is playing the Giants. Let me look at the Giants defense. I don't know, man. Let me look how he's historically played against the NFC. You went crazy against them. All right, let's see how this works. So stop loss back to 12. Only thing I changed was the ATR period. Okay. I mean better, 20 points better. Damn. Uh Days filtered 10, maybe 12. Maybe I need to go. Um, it's at 10 right now. I think 12 is going to be the where it's at. All right. Historically, how he's performed against the NFC, against the Panthers, he went dummy. Against the Saints, which he was supposed to expect to go dummy, he didn't. Maybe that answers the question. The Saints running game, but they really don't have like pass protection like that. All right. Let's see the back half. And this one's already the strong year one, right? Let's just see if it improves the performance here. Now, I'm thinking that instead of making it looser, maybe I should have made it tighter. Um, yeah, I'm gonna go to 14. Did I already do 14? This went from 500 to like, that's crazy. Let me do, um, did we already try ATR 14 yet? I don't know. I don't know. I think it could be a little better. Where's the drawdown? 72. It's high as fuck. Um, yeah. Damn. So 14. Um, okay, so 12, it looks like the spot. Okay. Review 10 and then update journal, then let's discuss. I think it's going to compact. If it could do this under 3%, that'll be something, but I think it's going to compact. I think it's going to compact, and compacting mean it's going to take all the files that we worked on, compress it, throw it in its memory, and a memory is all like a database, for lack of better words, so it can have memory on what we've done, so we can continue this work. Boom, 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 boom. ATR 10 lost 700. ATR regime flips too fast, filtering good trades or catching false signals. Sweet spot found. Let's try 11. Okay, I'm gonna try ATR 11. Let's see if I can split. Oh, should I say out loud? No. Until I get you robust, bro, I'm not allowing you to have 2 trades a day. Yeah, yeah. That's what I'm gonna do. I'm just gonna do ATR 11, and then that's it. Yeah, that's it. That's the only thing. I mean, ATR 11, and then entry start time to 9:33 a.m. Update backtest, then steps taken. And now it should compact while we're running the backtest, so that'll be Gucci. Let's do the next one. And so what's happening here? We're updating, discombobulating. That means you're going dumb. We're updating our back test, and then I'm also going to have Claude update. Damn, I thought that was going to do it. .py. Let's double check and make sure good. I know it is, but I kind of wanted to get it to compact already. All right, beautiful. Check that we updated the journal as well. And then that should get it to compact. So by the time damn, bruh. All right, double check the files to make sure, and that we updated the CSV file output as well. There we go. Shit. I was just trying to get it to compact. All right, here we go. Running our back test with our new parms. And what we've done is new session start time and then ATR of 11, kept everything else the same. So let's see how it works. Let's see how this works for us. Okay, still 60. 538 days filtered, days with no valid. Okay, all right, not bad, fam. I see the issue is that the ATR should be split into ATR period and ATR threshold. Okay. All right, beautiful. Beautiful. All right, now we're running it on the back half. So, I mean, we kind of accomplished our goals. I'm not going to hold you. The goal was to be able to create a regime filter. We made one that is robust and ready to go. I'm just testing different parameters to see which one is that Goldilocks spot, right? Not too hot, not too cold. Just right. And it looks like it may be 12. But I'm testing 11 right now. So I tested 10 through 14, and then 12 seems like that's where it's at. So we're testing 11 right now to see if that could maybe be the Goldilocks zone, but I think it may be 12. And again, I really didn't have to run this. I could have just ran with 12, but you never know. So I'd rather, holy shit. They just went from $400 to, that's crazy. That was explosive. That was explosive, fam. Drawdown is still kind of high. Peaked at 29. We closed at 29. We peaked where we closed. That's what's up. We peaked and we closed. Review, update journal. Then let's discuss. The journal's up to date. Now let me add, based on the back test we ran. Perfect. I think we're getting there. ATR 11 is similar to 12, no significant improvement. Conclusion, ATR 11, 12 is a sweet spot, performs similar. ATR 11, the earlier trades performed well, identical to 12. Both are profitable. ATR 10 is the regression. 11, 12, both configurations hold, solve the regime core problem. Strategy, okay. We noticed that the drawdown is still north of 50+%. Review the data and advise how we can get that to less than 20% approximately, ideally. What is the data telling us? Do this objectively. Previous results are here and current here. Grep and awk terminal command, then let's discuss it. All right, perfect. So what I want to work on now is being able to get the drawdown to be a little bit less than what it is, because right now the drawdown is on average 40, 50, 60%. And what is the drawdown? So all of our strategies is starting at $60. So, or excuse me, 100. So at one point in time, the strategy goes from 100 if it's 40% drawdown to 60. If it's a 60% drawdown, it goes from 100 to 40. If it's a 30% drawdown, it goes from 100 to 70, right? That's a bit too high, even though yes, it is recovering within the trades, but I want us to see what can we do in order to improve the drawdown so we can get it less than 20. Shit, if it's under 40, 30, right? That's a little bit more healthy than 60% drawdown, right? So I want us to be able to figure that out. So Claude Code is running a bit of terminal commands in order to figure that piece out. And I'm not going to hold you, like, I am really excited that I'm using Opus model, and it hasn't been like going OD with the amount of tokens, right? All right, let me just make sure it's Gucci. So we're working on being able to improve the drawdown for our strategy. And then once we do improve it, we'll have a more robust strategy, you know, because I mean, that's the final part. And then we've already back tested it. So we've already validated it, quote unquote, that the strategy works. And I've added the regime filter that it needs. Now I just want to improve it a bit regarding the drawdown. So once we get that bit up, then I'm going to make the actual trading bot. Now I'm going to start with using Alpaca, but as soon as I get the approval from Thinkorswim, this is going to be the first bot that I'm going to switch over to use Thinkorswim. All right, beautiful. So what's happening right now, I'm having Claude Code run a series of scenarios in order to figure out what is the problem with the drawdown, what are the parameters that we should adjust it to. And then once we get that, I'm going to test this one more time on 23 and 24, then go test it on 21. And then we're going to be Gucci to go start our strategy, start our bot. Now, I don't know if I want to hold off and make the bot a little bit later and just make that its own video, or just get this done now. So depending, I'll see how that works out. If you do have any questions, please let me know. My name is Creative. What I aim to do here is create different algo trading bots, AI agents, machine learning models, right? And I'm going to get to that as soon as I get the SageMaker approval. So that'll be dope in order to add. But again, if you do have any questions, let me know. I'm using Claude Code. Let me stop talking. Time stop. All time stops are winners, 100% positive. Peak ROI was 45%, 0 to 5, 30% peaked at 5 to 10, 24% peaked at 10 to 14. TP hit rate 0 to 1, okay, 13%. So we need to drop it to 2 minutes. Time stops aren't losers. They are small winners. They just didn't hit TP. The 35 trades that peaked between 10 and 14, if TP was 10 instead of 14, the time stop dropped to 43%. If TP 8 was added, the time stop rate would drop to 38%. The early exit trades hitting the TP in the first minute is 100% success. After 2 minutes is only 13% success. Interesting. So time stop to get time, not time stop, fucking drawdown. Most trades peak between, okay. We want to get the drawdown lower. That was the question up for discussion. Now, based on the review, let's discuss. That is what I'm looking to get done. New TP levels, the core, okay. Based on the data analysis, here's what's happening. Time stops. The drawdown isn't from the time stops. They're making money. The drawdown comes from the position sizing on the losing trades and giving back gains when the trades that were up 10% and end up exiting at 5%. Options to reduce the drawdown is to lower the TP3, capture 35% more wins at the peak, lock in the gains before they reverse. At a trailing stop at 5%, once up 5%, lock in the floor, prevent its giving back. Reduce position sizing in H2, smaller bets in validation, less money at risk. Exit at 2 minutes if up 5%, time-based exit, profit taking. My recommendation is to add a trailing stop or time-based exit. The data shows that TP1, 100% hit rate. Okay. After 2 minutes, if the trade is up 5%, this is likely giving back gains. A rule like exit at 2 minutes if ROI is greater than 5 would capture those 78% trades, and that peaked at 5 to 14% but timed out. What is your preference? Lower TP, trailing stop loss, or time-based exit? All right, hold on. Up for discussion. Let's do the next one. Oh, shit. Questions. Trey Henderson or Jalen Waddle? I'm going to go with Jalen Waddle, man. I'm going to go with Jalen. Yeah, I'm going with Jalen. Fins up. Fuck that. All right, I'm going with Jalen. All right, let's go. My fault. I had to get that last minute decision in. Let's look at our take profit. Our take profit right now is 25, 18, and then 14.5. I can add another take profit, TP4, to be 10, but am I overfitting? Right? Or I could add a trailing stop. So what I'm going to do, maybe I could do one of two things. I'm going to drop the max a whole time to 2 minutes and then drop the TP3 to, because look what the data is telling us. The data is telling us that under 2 minutes, we have a 78% chance. From 1 to 2 minutes, 78% chance. 0 to 1 minute, 100% chance. So I'm just going to stop it at 2 minutes. This 2 to 3 minutes is horrible. So let me stop it at 2 minutes and then drop the take profit to 11 point. I'm going to do 10.2, 10.28. All right. Drop the max hold time to 2 minutes and then TP3 to 10.22%, 28%, and keep everything else the same. All right, bet. My fault. I just noticed that the mic wasn't on. My fault, y'all. I noticed that the mic wasn't on. It's back on. My fault. My fault. I just started Jalen Waddle. I ain't checked the weather first. That idea was completely horrid. Oh, I'm still gonna start you, bro. I believe in you. I believe in you. Keep max hold time to 3 minutes. Bro, it's going back and forth, back and forth, back and forth. Cause y'all just saw what happened. All right. Beautiful. All right. Let's go to it, man. All right, running our back test on 2024. What we did is just lower the TP. Austin Jackson, boy. I forgot you played football too, huh? All right, come on. And I do apologize about the mic being off. Again, I'm still new at this, man. Austin Jackson, boy. All right, let's run it. Darren Waller, you playing football again? Holy shit, Darren Waller. How come nobody told me that? I would have started you, bro. I gotta go grab you again, cause come on. All right, I think I may have found. You really started Shador Sanders. That's gangster though. All right, let's look. Let's look. Let's look. Where did this one end up? 607. Where did it peak? 978. Oh, okay. That's a little bit better. We can do better though. We can do better. We can do better. All right, come on, y'all boys. Cam Jordan, bro. Oh, damn it. I was just kind of depressing. I'm not going to hold you. Come on, Waller. I definitely would have started you, man. All right, come on. There you go. Just be calm, man. Just be calm. There you go. That's all you got to do. Just be calm. Calmate, bro. Calmate. I appreciate you for doing that, bro. Good shit, man. Review using grep and auth, and let's discuss. Man. Run the ball, please. Run the ball. Come on. Go score. Get in the end zone. Get in the end zone. Get in the end zone. That's a touchdown. That's a touchdown, ladies and gentlemen. That's a touchdown, ladies and gentlemen. Boom. I'm out of there. I'm out of there. I'm not going to hold you. I thought it was going to be done by this time, but that's okay. Balance comparison. Get in there, man. All right, come on, defense. Whoop, get off me. Oh, boy, you playing the Niners? This is going to be an interesting game. Time dropped. Goal parity achieved. The TP is now capturing. Lower TP is working. But the time now average they were before. The lower TP is capturing the earliest, but the time stops that they used to exit a small profit are now exiting a small loss. The trades that peaked at 5 to 10%, but exit below entry, the drawdown is still 89%. The less than 20 needs a different approach: position sizing, trailing stop, or regime-based sizing. What do you want to do? Shit, bro. All right. Go back to where we were and let's really think about this. Let's really think about this, man. The issue of the 88% drawdown is a structural problem. It's not a time stop problem. Let me think about this. Looking at the starting balance of 100 and then final balance of 2,900, this means that at some point the account was down 88% from its peak. This could happen because the position sizing betting too much when the account is small. The losing streak, consecutive loss, the single biggest loss is time stop. Reverted to, let me think about this. When questions to investigate. What caused it? When it was okay. Yes, but do this objectively without bias. Oh, you had him. You had him. Wait, there's somebody. Bitch, that is CJ Stroud. Bro, I should have started the Dolphins defense. Okay, where the fuck am I getting my information from? I clearly asked you, is CJ Stroud out today? That's crazy. All right, what we're doing right now, I'm investigating why the max drawdown is a bit high, right? Because right now it's a little bit north of like 80%, 90%. So I want to be able to get that lower. So once we're able to get that a bit lower, then this strategy is going to be ready to go and ship. And then we're going to create the bot for it. So I would say in another about 30, 45 minutes, this strategy will be ready to ship. If y'all do have any questions in the interim, please let me know. My name is Creative, and I'm not going to hold you. I am watching football as well. So we're doing two things at once. Because I was thinking about, let me just cut it short. But instead of doing that, I'm going to finish my work. We're going to finish our work here. All right, come on. Nope, I'm here. Let's go, y'all boys. I'm here. All right, analyze losing streak. And that's where we're just trying to get better. So like I don't have to see when this bot is running live. Like you went from being up damn near 500%, then you're down damn near 80%, 90%, all in like consecutive losses, right? So I'm trying to get that to be a bit better. So that's the only part. I mean, the strategy itself is working. If you could just stomach that, that's ready to go. But that's something I think we can improve upon. So I want to improve upon it. So I'm having Claude Code run a bit of scenarios to figure out what the issue is and how we can improve upon it and how we can test it. All right, the root cause, 65% of the drawdown came from the position sizing increase when the account was the weakest. When the balance dropped below 500, the allocation jumped to when the account balance drops below 500, the allocation jumps to 84%. Exactly when you should be protecting capital. You're betting more. October 10th through the 17th, the streak proves it. 6 consecutive time stops, 5 losers. At allocation, 76 to 83%, lost 47% of the account. The same streak at 20%, only a 10% loss. This fix isn't about TPs or signals, it's about position sizing. Flatten the okay. Consecutive loss limiter or strong regime only. So we thought we had a consecutive loss function slash method. Hold on. Method that would reduce the position sizing if we hit consecutive losses, maybe 3 or 2 in a row. The position sizing would reduce by 40% until we hit 2 consecutive losses. If that is not in place, let's properly discuss how we can implement something like this for this strategy. All right, let's do the next one. All right, thank you for getting us right. I really do appreciate it. All right, no consecutive loss logic, proposed design, threshold after 2 losses, reduce position allocation by 40. When reset after 2, track the consecutive loss after 2 losses, 40% reduction. Okay. Again, now 36% after 2 losses resets to normal. Example, fourth reduction. This would have cut the drawdown. Okay. All right. Let's implement this. After you double check the math and the work, then let's implement, then update the steps taken. All right, bet. All right, check the math. Let's go. If you want it, we can get it. Let me know. All right, bet. Oh, throw the flag. Throw the flag. This gets us at the worst streak. Okay. No logic. Threshold. 50% reduction per loss after threshold. Also reduce. This gets us, okay. All right, let's go. Picked off. Fuck, come on, man. We didn't run the ball. All right, this gets this one gets the max contract, which doesn't depend on the consecutive loss. Now I need to update the consecutive loss counter after each trade. Let me find it. All right. Going to Miami. When do the 49ers and the Browns ever play? Oh, damn, you got popped. All right, now we're running a back test with the new parms. And this is with the consecutive loss. And let's see how this would work out for us. Oh, shit. Shit. This is what I was afraid of. All right. Um, we need this to be a little bit more smarter. All right. Um, All right. We need this to be a bit more intelligent in the sense of we need to weigh the losses because each loss is not equal, right? um, hold on. The following consecutive losses shouldn't be penalized as heavy. We need a better function slash method for this process that is able to adapt based on the loss. Let's discuss before we implement it. All right, bet. Check it down. There you go. You're right. The current excuse me, the current implementation treats all losses equally, but a loss of 3.4 is very different from a loss of 6. After the reduction kicks in, we're getting insufficient funds because the position sizing is too small. All losses weighted at 3 is the same penalty. After consecutive losses, the allocation reduction. Oh, good shit, boy. Good work, man. Proposed the loss severity system. Instead of counting consecutive losses, track the cumulative loss severity. The loss severity score, sum of loss equals the account balance at the time. So loss of 2.9 severity, 5.6 severity, cumulative severity 5, reduction allocation 0.5, normal. I love this. Reduction by 75%. Resets after 2 consecutive win. Reduce severity by 50%. Alternative, no, I like this. I like the weighted system. We like the weighted system. We like and think this will work. We want it to reset, however, after 2 wins, and not just reset to reduction of 50%. Does that make sense? Let's discuss and make sure. Excuse me. I should have started motherfucking. All right. Yes, that makes sense. You want a full reset after 2 consecutive wins, not just a partial 50% reduction. Severity score running are 100% normal, 75% 20. Floor never 0. Reset rule after 2 consecutive win, reset to 4 reset. Single win, not a do not reduce severity, must be 2 in a row. Um, so hold on. We want, bro. Hold on. Give me a second. Excuse me. All right, let's see how this works out. I'm waiting for running the back test on 2024, and we just updated the consecutive loss with the severity metric. So let's see how that's worked. Not to? Blended. I don't know. I think this kind of made it worse. 35% drawdown. I mean, yeah, but shit. Let's look at the validation. Let's see how this works with the validation. Thank you. Thank you. All right, come on, offense, man. All right. Yeah, I mean, we did get it better, but I mean, to what detriment? Let's see. Let's see. Review and let's discuss. Use grep and awk. Damn. And this is about the compact. Did he catch that? Oh, what a catch. Oh, picked off. Crib. Not take it to the crib. Not take it to the crib. Not take it to the crib. That's what's up. Mike Jackson. Whoop. Right. The drawdown significantly reduced, but the returns also reduced. The final cut in half. The severity system is working. It reduced the position sizing during a losing streak with protected the capital, but also limited the upside when recovering. The question is, the 64% drawdown still too high? We targeted 30. Tighten the threshold to kick in earlier. Reduce much more aggressive. Lower the we want a better balance. We want to be able to get those higher returns while also having the system work with it, not against it. Now think about this after you've updated the journal and advise findings. All right, perfect. So I'm going to have Claude Code do now after it compacts is being able to run a few scenarios and then tell us what is the optimal way for us to be able to have this system working a lot better. All right, come on. I should have started Darren Waller. You just ended up wide the fuck, bro. All right, let's go ahead and file this away while we're waiting on that. Proceed to do the next files. All right, beautiful. I'm just waiting on this to compact. It should be done in a few, like 10, 15 more seconds. As soon as that compacts, we'll be able to continue the scenarios. All right, beautiful. I thank you for doing your job. And this is, okay, there we go. See? So we can keep it organized. All right, come on. All right, let's go. And if y'all do have any questions while I'm working on this, please don't be afraid to ask them. What we're doing right now is we're going to update the backtest journal with our latest results. Then what we're going to do is figure out a way so we can get our severity loss system, quote unquote, to work more in favor with us rather than just penalizing us, right? So if you would, go ahead. If you do have questions, please let me know. I'm using Claude Code in order to get this work done. And I'm using the 3.5 Opus module. All right. The severity system triggers too early and cuts too deep. Oh, shit. The 5% threshold triggers after 1 to 2 normal losses, but by the time you recover from the 3 loss losing streak, you miss 5 to 10 winning trades at the reduction size. The strategy comes from the compounding winners, which the severity system throttles. A approach is the option 4, the loss type specific. This is the most surgical fix because it addresses why certain losses happen. Stop loss. Time stops. Why this works: time stop signal was wrong, deserves full penalty. Time stop, normal market noise shouldn't trigger protection. So V3 shows that the time stops average was 0.96, barely losers, and only 2.4% of trades hit time stops. This would let compounding during normal variance, only protects when the signal was bad, so it maintains the 25. All right, perfect. All right, check your work. Then once confirmed, let's update the backtest, then update steps taken. So you can see our steps taken. This is everything that we've done in order to get to this point of the backtest, right? So we started off being able to get the strategy from TradingView. We talked about the parameters, the session for the strategy, the exit rules, position, option selection, strike selection. So now we are on step 30, right? Where we added on the weights loss severity system. All losses were treated equally. After consecutive losses, we needed to reduce the loss so it wouldn't hurt as much. So this is the system that we've added. Now we're just making it a little bit more smarter. I didn't ask you to run it, but I thank you for giving me this command so I can run it. Beautiful, clear. All right, now we're running our back test on 2024. We have a few more steps to go before we actually create the bot for this strategy. What we're doing right now is just ironing out the kinks, right, for lack of better words. And once we get it to a point where it's working in our favor, then we're going to continue. All right, let's go. Fins up. Then we're going to continue our work. So if you do have any questions in the process, please let me know. I am using Python, Claude Code. I did use ChatGPT earlier when I had like a couple of questions that I need to flush out. But the main AI that I'm using is Opus 4.5 from Anthropic. And that model has been beasting it. I'm not going to hold you. All right, here we go. Backtest is running. So let's see how well it performs now. Fuck. Bro, come on. Oh, my goodness. All right. Get it out your hands. Thank you, man. Fuck. 319. We finished at 183. I don't know, man. I don't know. I still think we need to tweak this a little bit more. Because it's still being You know what? That's the idea. That once we hit 2 consecutive losses, but this makes it a lot more complicated. Hold on. I don't know. What are y'all seeing? Is this working? Right? Or is there more of a detriment than a benefit? Right? Let's see. You know what? I want to wait to see because there's one point of this strategy where it goes from like $400 to $1,000. Let's see if we can catch it. Hold on. All right, it's just a slow grind up. Damn. Still 51%. Still missing something. I don't know, man. I don't know if this is helping or hurting at this point. Review and let's discuss. Review using grep and awk terminal commands. Whoa. Bro, it's not even Black Friday anymore. Y'all still putting Black Friday commercials out? That's crazy. Beautiful. And if y'all do have any questions again, please let me know. We are working on our parameter adjustment right now for that strategy. All right, come. I don't know. Look kind of weird. A white person with a fro? Just tackle. Just tackle. Interesting. All right. Actually, performance is worse. The 25% weight of time stops isn't helping because the time stop loss are frequent. 91% of trades still accumulating the severity even at the 25%. The protection still triggers during normal variance. The drawdown slightly increased. The issue isn't the weight, it's the time stops. Losing count shouldn't count at all since they're small and nominal. Let me check the percentage. Interesting. The time stops are net 1280. That's significant. Let me compare it with no severity. The problem is that the time stop losers are the main source of the loss. 1280. The weighting system at 25% still accumulates over 91 losing trades. Options to explore only count the stop losses, ignore the time stops entirety for severity. Raise the threshold significantly instead of 510. Remove the severity system and try a different approach. A daily fucking A, man. um um let's remove the time stops and only count the stop losses and increase the thresholds a bit as well. Holy shit. All right, here we go. This is going to be the last iteration that I'm going to do. Then after this, let's see where we end up at. Let's do the next file. I thank you for that. Oh, we got the ball. Let's go. Update the steps taken. Man, fins the fuck up, bro. Let's go. Oh shit, my fault. Good work. Jordan Brooks. All right, let's go. Updating the steps taken. Beautiful. All right, let's run our back test. We're running it on 2024 to see how well this severity system is going to work. Go get some. And you threw a pick. I fucking knew you were going to do that, bro. Every single time you try to do a deep ball, I'm just disgusted. Why don't we just run the ball? I really got to reevaluate this because I don't even see what the benefit this system is doing right now. Drawdown is 60%. Shit, it was where it was at before without all this complication. Yeah, I don't know if there's benefit in being able to keep this severity system. I'm not going to hold you. I'm not even going to. All right. Let's toggle off this severity system and we are going to go in another direction. All right, so this is going to be a good stopping point. What I'm going to do is just go ahead and stop for right now. And we're going to come back a little bit later to finish off this strategy. There's a couple of things I have to rethink and reconsider, but again, we're going on 3 hours now, and I think we have made great strides. The biggest thing that I wanted to do is create the regime filter. We created it. It's perfect. It's running. The strategy is working, right? But what I'm doing right now is just to being able to work on the risk mitigation. But right now, I think that the strategy is ready to ship. So I'm not going to hold you. It's just a matter of being able to figure out this calculation as far as being able to mitigate the risk a little bit better. So nonetheless, man, it is your boy Creative. We will be back at it again with another episode. If you do have any questions, comments, or concerns, please make sure to leave a comment.